Hi guys, welcome to the Savvy Money Show with me, your host Sean. And today I'm extremely happy. For one, over 160 of you have chosen to subscribe. And I think that's amazing. I only started this channel just over 4 months ago. And I didn't think I would get this response so quickly. Now, I want to say thank you to each and every one of you. There was times when I thought no one was interested and I might as well wrap it up. But as I started this as a project with my son, I kept on, and you guys are the ones that make the channel because you give me the incentive to keep it up. Now, another reason I'm happy and celebrating is we won the FA Cup final. Yeah! Well, I understand that most of you are probably not Arsenal fans. That's fine. As long as you believe in investing, you're okay with me. Now, I will soon be opening up another portfolio of mine, a stake one, and showing you the benefits of having multiple portfolios if you're in the UK. I realise in the US it's not a benefit, but in the UK it can help. And I will I hope you are all getting on with the tools I gave you in previous videos. Let me know if you're not. If we get to 300 subscribers, then in the next couple of months, then I will release another tool that will help you, an updated one that will help you track your shares and the dividends in the shares. Now, we're going to go through one of my portfolios. You may see some changes. I have moved some of the shares from the ISA to invest, and for the ones that are non-dividend paying, and I've moved some things around. You may think some of these are pitiful, not worth going into, but then someone said, you know, buying a share in Kodak wasn't worth it when I had a spare $2 lying around. And then what happened to Kodak? Anyway, we have AC Immune, which is down at the moment, but when I bought it, it was $10.95, and I actually think this is a good company to own because it's a biopharmaceutical company and it has collaborations with a lot of bio companies, Eli Lilly, Roche, Biogen, loads of them, and it's a profit making one. Now, with this, I believe I bought it a while ago. It went up and I took a profit in this in the shares I've got left, and then it went down and it's gone up again and down again. It's a volatile stock. Now, the thing is, it's a cheap enough stock, the P ratio is good, and I think once things open up again, its drugs will be used a lot more. Now, it's got a low debt to assets ratio, 9%. you know, it makes a good profit margin. It's only just recent. Last year it only just went into profit, and that was 41% profit on its items. Now revenues decreased 83%, but it was still making a profit. Just now, on to the next one. Achieve Life Sciences. Now this is another one that I think I've just gone into this week. I'm currently in the red on, but if you remember, I did a video on it, and I believe it can go up. It's deals with lung disease and a few other things. I just think it's going to have a run up before too long. Aegon. Now this is one that I spoke about as well. It has over $1 trillion in assets. It has a 5.4% dividend yield, 3.62 PE ratio. It operates in the US, in China, and in the Netherlands and Europe, rest of Europe. It's a Netherlands company, so it pays less tax, and I've mentioned that in a previous video. AFC Energy. Now I got lucky with this because I bought here, there was a run up, I sold off, and I was left with my shares as a profit, and it came back down again, and boy did it drop. Now the revenues remain flat during this period. It has low debt to assets, 32%, and the thing is, it deals with industrial fuel cell powers. And I remember a while ago, this was really big, you know, this was a really big thing. AG Eagle. Now this is one of those I did a video on. Now I said how we only need to play the rumour, whether the rumour is true or not. One thing I didn't want to put in that video was how Amazon filed a patent for its drone, which is very similar to the patent that AG Eagle filed. It's not exactly the same, but it's very similar. But the thing is, it ran up, and I sold off, kept these shares as my profit. I haven't made profit, all I've done is kept these shares, so this is my profit. Then what I did was, when it had the second run up, I sold out of it in my ISA. It came down, started to come down, and I bought it back in my invest. By doing that, I took a non-dividend paying company out of my ISA, left because I only have £20,000 that I'm allowed to use in there, allowed to invest in there, and it frees up an allowance in there, and I moved it into my invest, and at the same time I made about 14 quid from doing that. Now we have Age X Therapeutics, and don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Saving Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. And if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. It's another biotech company that works on tissue regeneration. Now, this is one that, to tell the truth, I bought at the top, and I'm in the red on it, but it's only, I'm losing £4 out of it, you know. So I put £15 in it. I had a spare £15, I whacked it in, and I'm losing £4 on it. So it doesn't bother me. I think it will come good eventually. Baccanara Minerals. These 61 shares are all profit, and it's a natural resource company that deals with a number of different resources, and it mainly deals with nickel and copper, but it also has other minerals as well. And they have a debt to assets of 4%. That is the equivalent of not having a debt on your books. They had a run up. I sold out my initial investment and was left with 61 shares and a quid or two profit, but we won't really talk about it. ARC Document Solutions, I spoke about that previously. I bought it, it had a run up. I sold out my initial investment, was left with this, and it's a profit making company at 13 PE ratio, dividend yield of 3.81, and it has paid me dividend as well. So the profit margin doesn't look that good because it's showing 2009 into 20 and the revenues decreased by 9%, but once things are up and running they should do well. Debt to assets are 61%, which is a little higher, but it's fine. But they deal with architectural engineering and construction, but they provide document solutions to businesses, various types. So, and information management, you know, and web-based document management, you know, like cloud-based, and that's why people haven't been going in it. And to tell the truth, what they're doing at the moment is they're providing services to their customers, allowing them to pay later as a way to ingratiate themselves and a way to bring on new customers, so that they can so that they can improve their customer base and improve their customer loyalty. But this is all free shares anyway. Ashford Hospitality. This is a free share because I sold my investment. I sold more than my original investment because I wanted the money for another investment, and I was left with one. And it's a REIT, and focuses on upscale hotels. And to tell the truth, if it runs up again, I may sell it, but at the moment I think REITs are well undervalued. There's nothing wrong with keeping it. I don't like keeping too many shares though. For me, the ones that I've got free, it's more like keeping, I'm thinking of keeping like an ETF sort of thing here. Baccanara Lithium, well, I bought this and it was just because I thought, oh well, you know, there's all this with lithium companies, and you know, they need lithium for the EV cars and all this with the EV cars and that. And I bought there, it was going down, and I thought, what have I done? It's gone up there, and I thought, oh good, it's starting to move, and then it came back down again, and I was like, oh no, I should have sold. Instead, it went up there, and I think I sold up there. I think I sold there because I started getting worried, oh, it's going to go down again. And I took out my initial investment, and these 26 shares are what's left. Now, Berkshire Hathaway. This is one I had in my, sorry, this should be across here. This is one I had in my ISA. I bought at $160. If for those of you who have been with me for a while, you know I did a video on why you should buy Berkshire Hathaway when it was $160, and I broke down the entire company and each company that they owned and how it was such good value. And now it's the Jeremy effect, where Jeremy come out when it was 177, 180, and said, this is the easiest money you'll make by investing in this now. So what I did was, I mean, look at that PE ratio, 5.73, and you're not going to, even if you bought it now, look how long ago since it was at this price. You know, 2018 crash, or, you know, yeah, in 2018 crash, in the same year. That's the only time it's been this low. And he's had all that growth since then. What people don't realise is around here, he sold Apple stock at 320 a share, and no one speaks about this. They all speak about the banks and Delta and airline shares, but he sold Apple shares because he originally had 20% of his holding in Apple, and he's gone down to 5%, and he sold it 320 a share, and then back here he bought it for, was it 150 or 170 a share? So think about that when you're thinking about whether he's still up to it or not. I had more shares. What I did was I put 3 in here. I put a couple in another account of mine, and then I sold them in my ISA. BioLace. Now this is one that, if you remember, I said, well, President Trump had spoken about using ultraviolet light to kill COVID-19, and how they are going to put it into phones and apps, and they already have a device ready. Yeah, but it's a little bit out there. However, I've only got £4 in there. I'm in the red on that. Nano, as you can see, only 3 shares because it had a run up to cut my initial investment. I'm trying to make a small little ETF paid for, like with no investment, basically, or minimal investment. Boxlight. Now you remember I did a video on Boxlight. I bought here, it ran up, I took out my initial investment and it's come back down again. Now I was considering going back in, buying up more shares, but all I did was move my shares from my ISA into invest. Well, British Land Company. Still have faith in this. People decide to slag it off. It's a real estate company. They build and manage some of the best places in London, and gives a 6.39% dividend. Now, it's took a loss because revenues decreased 32% because they come out and said, we will let those that can't pay their rent, we will forego their rent and we'll review their rent next year. What do you think is going to happen next year? Are they going to say, all right, you can keep the same rent? And they're going to say, no, you have to pay us more rent because you didn't pay last year, once everything's up and running again. But 168% down. They've got enough money to survive. They've got all the stuff ready, and 168% down. They're still building places. So, no, 37% debt to assets. No, I think, and net asset value is £9 a share. So that's one that I think people are missing out on. BT Group. Now, I bought these on Friday because with my other portfolio, my ISA, I'm trying to move in some of them into here. But what I did was I bought some BT shares. I have 1,000 BT shares, by the way, full disclosure. I bought some about 33 more BT shares because it hit low, and then it went up to about 125. I sold, and then it's gone down to 100, and I thought the profit I've made from that calculates about the same, and so the profit I made from that for and so I'll put the 10 in. It's very low price, you won't get it at this price again. And yes, they've decided not to pay a dividend this year, but next year they're going to put another dividend in. They're going to be the main player in the UK with 5G, and they're going to they're going to be one of the main players in Europe with 5G. So I think people have overreacted with the news with these. Bushfield Minerals. This is a South African based company which produces and supplies 3.5% of the global vanadium. Now, they are profitable, the PE ratio of 15, and they have a profit margin of 53%, debt to assets of 38%. Now, I'm not sure if it was Zex or Motley Fool who suggested this one, but after I had already done a video on them, and I would have liked to have included their analysis in it. I bought it, it ran up, and I took out my initial investment and a few quid with it, and I've got these shares left over. I know it's only a quid, but when things come back to normal, and you know, I expect this to really go up high. Spaq. Now, it's a blank check company basically, and I've got £10.30, so it's no biggie. They have to pay me back $10.30. They have to give me back 30 cents less than what I've paid per share. CBL and Associates. Now, this is a real estate investment trust, and they give, well, they say 149% dividend. I doubt it, but then debt to assets is 83%, and even if they did, you know, it's 18 cents a share. They are one of the lesser known ones. They do like outlet centres and shopping malls. I wouldn't expect a dividend. That's why it says 149%. It's more of a growth play, and I bought, it had a little run up, and I took out my initial investment because it was a lot more than this, and then it dropped again, and so it's free share. Check. Now, I like this company, and this is one that I've got 4 free shares because I sold during the run up. Company develops C-Scan. It's an Israeli medical diagnostic company which gives a capsule based ingestible image for colorectal cancer screening. People don't realise how good this is, because what it is basically you take a tablet that screens you for cancer. They've designed it for colorectal cancer screening, but it can be used for stomach cancer, which has the highest death rate per patient than any other cancer. Yes, we have cancers like brain cancer and all that, so many patients die in that, but you check the records of how many stomach cancer victims survive past 1 year and past 5 years compared to the other cancers, and you'll see. Now, I think this is one, 34% debt to assets. I think this is one that can do well. Yes, I've only got 177, but you've got to think that once this goes mainstream, how it will do. Churchill Capital, cool. Now, again, I've only paid $10.50. I think it'll do well. Clean Energy Fuels. This is one I don't know why people are not picking up on it. It's got a PE ratio, it's profitable. Clean Energy Fuels, during COVID-19, or the Roni Rona for our friends across the pond, revenues increased. You know, the only other companies that have done that have been the FANG stocks. There's been few other companies that have increased their revenue. 6% profit margin. I know it's not much, but you've got debt to assets of 31%. Now, it's a provider of natural gas as an alternative fuel for vehicle fleets. Compressed natural gas, liquefied natural gas, renewable natural gas. Now, it provides operation and maintenance as well. Now, think of Helion. You can even think of Nkla. You know, I mean, although they use helium, but the thing is, this company should do well. You can look at Workhorse. They got this new grant, Workhorse and helium, where their vehicles would get a ticket up to $50,000 off of the total price of their vehicle, because it's natural gas, and this is one of the companies that they could use, but people just haven't gotten on it yet. Colony Capital Class A. Now, so REIT basically, the same old thing with these REITs, but considering it had a little run up there and I took out my investment, I'm not too bothered. Coty, this is one that I'm losing on, and I put a small investment in because, well, Kim Kardashian, they were making Kim Kardashian the face of it, and I thought it would give a bump to it, basically. Hasn't moved it anywhere but downwards. Dark Group. Now, Dark Group I think is a good company, and I think come the winter time, the next quarter, they're gonna announce a big uptake in the flights because people want to go away. P ratio of 5.5. Sorry about that. I don't know how you put up with me, I'm putting myself to sleep. Dividend of 0.4. Now, Dropbox. I've got one share here because in my other account I've got a few shares. I spoke before about how I like them for their data services, but I also like them for their electronic signature service, and I did a whole video on that. Emerson. Now, this is one that I have taken my profit in shares. Now, I thought I was just going to lose money on it, but because I bought it, same day it dropped, and then it had a run up, and I thought, oh, should I sell and should I leave it in case it carries on running up? And I sold, and I was left with 50 shares. It's my profit, £2.15. Every. Now, this is one 30 PE ratio. They do games like for Vegas and that. This is one I kind of class as a bit of a mistake, but the way I see mistakes are, you're paying for the education, so you don't make the mistake again. I like Every, I do. I think they're a good company, and I think they do well. But I bought into them, not when Vegas was opening, I bought into them just as they were closing down. You know, just as they were locking down a lot of states again. So, I don't know. Facebook, what can I say about Facebook? Oh, I've got another couple in another account. I bought the others at 188. Oh. I've been trading these regularly. When I saw a trend that when it hit 240, institutions were selling off, like pension funds and the like, and now it's gone over that, obviously, and I just think this is one of those companies that's, it can go as far as it wants to. FireEye. You'll see I've trimmed a few shares off of here. Not because there's any reason to, but because I have another portfolio where I'm putting what I call a cloud-based, making a cloud-based portfolio, and FireEye is one of them. There's Facebook and there's Microsoft and a couple of others. That's why you see me trimming a couple of the shares in here. And Flying Eagle Acquisition. Now, this is supposed to be a good one. It's supposed to. I like the company going after, but it's dropped down quite a bit. If it drops down to $10, I might go into it again. However, but it's I want a letter of intent signed and sealed. I want the merger to be a bit closer. Foresight Autonomous. Now, this is a funny one. I've only gone into it recently. It's had a run up and a bit of a pullback. I sold a lot of shares when it hit 15.5. Well, sorry, I say 15. 155. I didn't get the top. I got 155, and basically I kept the shares in case something happened for a merger too. Now I've only got this in there, but I do think they'll do well. Gilead. This is the one dividend company that I've got in here, mainly because they are. I didn't have any more allowance in my ISA. That's why I'm trying to move all the non-dividends into my invest. It's just this came down at such a low price. Now people are thinking, oh, they're doing so well with a vaccine that this won't be used anymore. But trust me, this will be used. You'll have cruise ships that won't be holding vaccines, they'll be holding this so that they can sell. GlaxoSmithKline. I mentioned this. They have, I mentioned this in the previous video. They have their earnings coming up. They have their dividend coming up. They have, they've had their earnings. Sorry, they made a loss because of 2 of their drugs weren't being used because during the lockdown they're not doing so many surgeries, and that was to be expected. But their dividend's coming up soon. They're keeping the dividend. On top of that, they've received $2.1 billion. Them and Sanofi have received $2.1 billion from US government for their vaccine. I said back in April, these were extremely clever in that everyone else is chasing a vaccine. These guys are chasing a booster. Any vaccine will need a booster shot. So for these guys, it's not like, if you're not first, you've lost when it comes to the vaccine. With these guys, they don't have that problem. You know why? They're going to be the first with a booster. And it has 2 options. Firstly, 6 months down the line, you're going to need a booster. Secondly, if there's a shortage of vaccine, you can split the vaccine and give them a booster straight away, and it boosts the vaccine. So they're incredibly smart with that. GrafTech. Now I did a video on this. It's one of those that's you need. It's essential to the production of electric arc furnace, and it's 2.34 PE ratio, 0.66% dividend yield. The debt to assets aren't very good. The thing is, I've had some run-ups where I could have taken like my initial investment out. I have taken some shares and trimmed down, but I haven't taken all my initial investment out. Why? Because when a product is essential for use, it doesn't matter if it's not being used at the moment. Alright, now this one, 1.6%, 1.6 P ratio, 2.4% dividend. Now, got into this recently because I invest in residential mortgage-backed securities. It's guaranteed by the United States government agency. So they're guaranteed. It's not like it's a bank's mortgage. Jemaya, Africa's Amazon. I bought into these. I sold. I kept 2 with my profit, and I took some money as well. I still believe in them, but I'm actually hoping they drop, so pick up more. They actually hit 200% one point. Kensington Capital Acquisition. Now this is a company that I sold my initial investment out of, and these 4 shares are free. Same with Land Securities Group. That I got them early on, and I thought, oh no, what have I done? And they gave a 4.22% dividend, but they had a run up, and I managed to secure 5 free shares. Lancadia Holdings. Now they're the same. I had a run up, and I sold my shares, and because to tell the truth, I don't like the way they've acted with the debt, moving it on a golden nugget on online gaming, and Lee Auto. It's one I'm down on. I wanted to get into it because, in my opinion, I don't mind that I'm down on. I'm going to be in it long term. In my opinion, this is one most closely like Tesla, because they do everything in-house, and just look into them, everything like that. I said about Lululemon. I have Lululemon in another portfolio, but I'm using odd bits of money to pick up shares in here. I'm trying to bring it away from my ISA into here because no dividend yield. But this is one of 2 home fitness brands. It'll be like a duopoly, and it also gives sports apparel, and it's one of the few that made a profit. Micro Focus. People don't understand this, but I show them this chart, and you see how expensive they was. Yeah, look at that. Look at that. Yeah, they were £26.18. Just a few years ago. Now they're £2.79. and they're still doing what they're doing. Still software and support. PE ratio of 4. Now, the revenues decreased in 2020, but if you look since 2017, the revenues have been increasing. 44% profit margin, debt to assets of 56%. Yeah. I think this is one that's gone under the radar. Netfin Acquisition. Well, another black chip company that I hope to make money from. Neo. This is a funny duck. I believe in Neo. I had it in my ISA. I sold it in my ISA at 14.80, I think it was. Yeah, it went to 14.81, so I was one cent off the top. Oh, how happy was I? Then I've come to here, and it started dropping, and I bought it because I'd planned to buy it up in here after I'd sold it in there, and it dropped to 11.86. So that shows you how much I'd made on it. Now, I originally bought it for $3 a share. Oxygen. Now, this is a company I love. It was at 240%, and I sold my initial investment. I was left with 25 shares and some money. One Stop Systems. This is one that I'm down on, but it's only 20 quid. And this is one that they make the computer systems and the artificial intelligence that goes in the cars, sort of things that you'll need for the autonomous driving. Now, it has a PE ratio. It's a terrible PE ratio, but that means they've just gone into profit. Now, debt to assets is 28%. OPES, this is profit. These 10 shares. Origenics. Now, I'm losing on this, but I do believe in them. I do believe that they will go up. I'm not going to put any more in there. There's, pager duty. This is one that, see, this is the thing with trading 212. It's $30.48 a share. Sell price is $30.12. My average price $29.90. It's showing I lose £7 1 pence a share because of the exchange rate. So that's something you've got to look out for. So it's actually gone up, but it's showing I lose money. Now this is one that I think will do well. I've done a video on it. It's 29% debt to assets. Peloton, the other home fitness brand, and it dropped. I picked it up at $59 a share. I picked up 6 shares. I put 3 shares in here, 3 shares in another account. They can't make the bikes quick enough. They are doing all they can to make the bikes. They are working on a lower cost treadmill. I just think they're here to stay. PTK Acquisition. Now, I'm going to say blackjack company. I'm not going to put any more in it. It's low enough already. I bought it at a low price. Red Row. Now, losing 26 quid on it, but I'm holding, pardon me, I'm holding it long term. It's a housing development company. They moved out of Greater London. They still have their projects in Greater London, and they've been building. This is the thing, people are under the impression they haven't been building. They've been building through coronavirus, but they have a PE ratio of 4.79, dividend 4.66, which is cancelled. You're buying this for the growth. You know, I mean, you're going to double your money when it comes back to normal. They're going to save costs by not building in London. There's plenty of places that you can build where you make money outside of London. Resolute Mining, well, this is a gold miner, and this is an open pit mine. For those of you who don't know what that means, well, basically they don't have to drill underground, and which has a lot of problems getting the gold out. They basically go scoop it from the ground, and then once they've taken it off, they scoop more out. It's basically like going in the back garden and just taking off out, and then just processing the gold. So much easier. Secure income. Now, this one is a REIT with 5.64 PE ratio, 6.09% dividend. Now, it has healthcare REIT. It's a healthcare REIT, and I don't understand why it's down, because healthcare is one of the few places that's been fine. Now, when it went up, I took out my initial investment, was left with 9. Snap, I'm down on this. I still believe in the company, but I'm only down a couple of dollars a share, and I think it will come back. Spartan Energy, I'm not a big fan of Psth, but these two shares are free. I bought into it before I did my research, and I made those two shares as a profit, so I'll keep them there. Synesis Pharmaceuticals, they had the run up, which you see. I took my money out and left the 4 shares a profit. It's only 92 pence, and it will it's going to stay there until it does something or go bankrupt. You know, it's something that can hit the sky or just hit a truck. Tailored Brands did the same thing. You know, it's a specialty apparel retailer. P ratio of 0.39. Now, I know apparel is really bad at the moment, but these things are going to come back. Now, debt to assets 104%. I don't like that. Profit margin minus 2.86%. I don't like that. But I bought it. It had a run up, and I sold out my shares. I'm left with 4 shares, so 3 shares, and it's only 92 pence anyway. Tesla. Now, because of the exchange rate, I'm down 13 quid on it. It's half a share. I've got 3 shares in my other account. If you remember, I sold at 17.80, and I bought back at 14.31. Still, what can you do? Therapeutics Acquisition. This is profit because I bought and then I sold, took out my investment. That's pure profit. Tonics, the same. I took out my initial investment, and that's pure profit, and it keeps going up and down. Now, there are some companies where I won't keep the shares in, and with SHOL, I really do believe in this company. The problem I had with this is I noticed the trend mirrored Nkla's trend line. When Nkla went up, this went up. When Nkla went down, this went down. I didn't like that, so I sold out my initial investment, and these 18 shares are from the profit, and I just left them there. Tricida. No, it's a one I did a video about, and it's going to have FDA approval. I think there'll be a run up. Vexart. This is profit, this share, so it doesn't bother me what happens. Well, it bothers me, but not that much. Virgin Galactic, this is profit. I bought in and I sold out when it hit about $26 a share, and this is profit. So, you know, whatever happens with it, it's not lost money. Workhorse. See there, I bought a 1044. I bought a lot more. I sold out my initial investment when it had its run up, and over 100%. I kept the shares as my profit and a few quid extra. I also have Workhorse in another account. Now, I wonder if you notice the changes. I hate this where they put the return and invested. I haven't invested that much in there. What I've done is I've taken the money, I've invested in one company, and then I've sold out of that, taken it in another, put it in another company, and they've classed that. So if I've taken, say, 200, put it in Resolute Minerals, and then I've sold that 200 out and put it into ARC Document Solutions, they class me as invested £400 rather than £200. Still, let me know if you notice any differences. Are you in any of these shares? Are you planning on picking up any of these shares? Which shares are you planning to pick up? Don't forget to hit the like button, comment in the box. It really does help with the YouTube algorithm. I'll see you in the next video. Goodbye.